In earlier videos, we've identified what a head and shoulders pattern looks like. And we've seen that the head and shoulders pattern is a very reliable technical pattern. However, it's best traded as a reversal pattern. There are occasions when the head and shoulders pattern can be traded as a continuation pattern. And in this video, I'm going to show you how to recognize a head and shoulders pattern as a continuation pattern and then how to trade it. I hope you find this video helpful.
Now in this video, I'm going to outline another key technical trading pattern. We've already covered the head and shoulders as a reversal pattern, and that's the primary and the main use of the pattern. However, in this video, just going to outline head and shoulders as that continuation pattern. Now, before I get into the nuts and bolts of the pattern, it's just worth saying, one of the key principles that I teach aspiring traders is that when we trade technical patterns, ideally, we want to combine these technical patterns with big fundamental narratives. So when we combine both the technicals and the fundamentals together, then we are putting the odds more in our favor because there is specific reasons for the instrument that we're trading to rise or to fall. So the key thing is we're not just looking for patterns, we're not just looking for individual technical places to enter and exit and trading those blindly. Instead, we're waiting for markets that have lined up their fundamentals. Now, with that being said, I will go through an example of this later on in the video, but I just wanted to start the video before we look at the head and shoulders continuation pattern so that we don't get too focused purely on the technicals. Now, the head and shoulders as a continuation pattern is exactly as it sounds. So what you want to do in order to recognize this head and shoulders, you want to have a run up and then a pull back from a recent high. So a pullback creating a left shoulder, a deeper pullback creating a head, moving back up to that previous shoulder line, pulling back before another attempt at breaking higher, and then that attempt results in a break of the neckline. That would be the head and shoulders pattern as a continuation pattern. Now, the entry is very similar to my previous video on the head and shoulders pattern. Please do look on the blog, go back and refer to that because we've gone into that in some detail about how to enter, exits, targets. I will just briefly go over it now. The textbook entry for a head and shoulders pattern is on a break of the neckline. Now, how do you know when the neckline's broken? The best way is to look at a daily close above the neckline. So when you have a candlestick chart that closes above that neckline, that gives you a good indication that that neckline has broken from a technical perspective. Often you will get another chance of a return to that neckline. So it is possible to wait for the break and then wait for a retracement back to the neckline. Of course, the risk is that you miss out on the move. Now, in terms of the target of the move, the target is, as with many technical patterns, is the height of the pattern. So the height from the head to the neckline would be the target. You just extend that line from the head to the neckline up to the upside, and then that would be your ultimate target. However, on a longer time frame, you might want to trail the stop. I'll give you an example of that later on in the video. Stop placement, the stop can be placed quite narrowly just below the neckline. So you could have it halfway between the shoulder and the neckline. You could have it behind the right shoulder. It really depends on the conviction that you have for the trade. But basically, once price comes back down to that neckline, you know that the pattern has been invalidated. Of course, you want to combine that with with fundamentals so that you're not just trading it blindly. So let's have an example of this. And there's a great example that I've just taken in my own personal account. Now, a great example here is on the Aussie Japanese yen at the moment, because we see the head and shoulders as a reversal pattern and as a continuation pattern. First of all, looking at the weekly chart, here's the head and shoulders pattern in the typical way we'd expect as a reversal pattern. You see, we've had a long downtrend, and now all of a sudden that downtrend is being broken, And we can see that the left shoulder is here, the right shoulder is here, here's the head, that makes that the neckline, and this was the entry which I took on my own personal account. That break higher was the entry, and already the trade has got into a nice profit. This is on the weekly chart. Now, what were the fundamentals? Global growth, a vaccine returning is in place for COVID-19. Expectations of global growth are in play. The Australian dollar is moving rapidly higher. The Reserve Bank of Australia has reached the limit of their cutting cycle, so it's flat to raising interest rates from here. The outlook is good for Australia. Australia's also handled COVID-19 very well, managed to keep a lot of cases out of the country, unlike others, so it does stand to gain on a global growth narrative. That's the fundamentals. So there we have the head and shoulders as a continuation pattern. But I was also in this trade with a head and shoulders pattern as a continuation pattern. So you can see here we had price moving higher, and then we have here a head and shoulders pattern as a continuation pattern. So you could argue it's a minor, a very small reversal, but with this strong run up higher, that to me is more a continuation pattern than a reversal pattern. So in an ideal world, you want that continuation pattern to be right up the top here. But this is close enough, and given the strong fundamentals for the Australian dollar Japanese yen currency pair, this was a great trade to enter. So the entry, very simply, on the break of this neckline. So you might have waited here, and then you can see, look, you've got a nice return to that neckline and price to move higher. I entered on the break of this neckline, stops just running below that 75.34, and target is the height of this pattern. So the 77 down to 73, so around 400 points. So you're looking 78, around sort of 82 is your measured target there for the head and shoulders pattern. So I've entered two trades, one on the daily, one on the weekly. Because I'm in this on the daily, I'll be holding it based on the weekly, and I'll be looking at just trailing my stop as we get swing points moving up in the direction of the trade. So that's a couple of a real world example, one that I've entered in, and one that is on the weekly chart. And obviously the size of that continuation pattern is huge, so there's still time to get in on that weekly entry one as well. Not trading advice, of course, but it's just good to have education to see how someone from a professional trading background goes about making trading decisions and goes about using the reverse head and shoulders pattern. So if you found that helpful, please do follow me on Twitter. You can connect with me at LinkedIn. You can also send me an email at giles.coghlan@hycm.com. I have put together some great programs to help traders take their trading to the next level at zero cost to you if you sign up and deposit with the broker HYCM. I'm the Chief Currency Analyst for HYCM, and I've personally put together a fantastic training program to help traders take their trading to the next level, and that's compensated by becoming a client of HYCM. So please do contact me direct for some great programs that I've put together that are really excellent and will really help you combine fundamentals and technicals and trade in the way that I've outlined in this video. I hope you find that helpful. If you do, give it a like, thumbs up, share it across media platforms. That would be much appreciated. And I hope you have a very good rest of the day. Remember, Monday, 12:30 GMT, I do an online trading workshop on Monday where I go through looking ahead at key market events coming up, and also another one on Wednesday for HYCM clients. So please do register on the link on my blog at hycm.lab.com. You can find the details of the blog there, and it will be great to have you connecting with me in the future. Thanks now, everyone. Take care. Goodbye.